Hi, I'm Patu from freefincal, and this week let's take a look at Axis Long-Term Equity Fund. This is a equity-linked saving scheme where you can save tax under Section 80C. This was the darling of new investors and those who wanted 80C benefits via mutual funds a few years ago, but has its performance slipped? Is it still good for existing investors? Can new investors consider it? So let's take a look at these questions. So this fund was started in December 2009 as Axis Tax Saver Fund. A couple of years ago, they labeled it as Axis Long Term Equity. It's a very interesting choice because it's not immediately clear if Axis Long Term Equity is a tax saving fund or not. And it's a very interesting choice. And then the AUM sort of grew very rapidly. Uh, Most probably because Axis Bank had a big role to play in pushing the AUM and so on. So have a look at the AUM growth. 1 month after inception, the AUM was only 4.9 crores, so they didn't collect much during the NFO period. 1 year later, it was 66 crores. Another year later, 145 crores. One more year, 446 crores. That's the big push. January 2014, it became 849 crores. Then January 2015, from 849 crores, it became 3,869. That is just astounding. January 2016, it became 6,885 crores. January 2017, 11,000 crores. 2018, January 2018, 16,000 crores. January 2019, 17,000 crores, and it's now standing around 18,000, almost 19,000 crores in July 2019. That is just astounding AUM growth. Of course, part of it is because of the growth in the markets, but it is clear that investors have flocked to this fund, and in part because of the bank pushing it, Axis Bank pushing it. Now, large AUM per se is not a problem, but when there is such a huge influx of funds, it's very difficult for the fund management to handle it. And Jinesh Gopani has been managing the fund since April 2011, a little bit before the restructuring, I think, and into Axis long-term equity, and he has seen this big inflow, and he has managed it reasonably well. That's I think from January 2012 to I think the next 5 years, it's 7,548% increase. That it's just mind-boggling increase. Such a large increase can affect performance. We will talk about that. We'll see how has it affected and how it is affected. So the fund has been typically a large cap fund with some mid cap exposure. That's how ELSS funds always are. So if you didn't know, ELSS funds are managed are regulated by directly by the finance ministry and not by SEBI. They are the ones who set the rules for ELSS funds, and there is a mandate of 80% in stocks, 80% in Indian equity, and so on. I have a post on this. I have a video on that as well. You can have a look at that. So let's take a look at before we begin. So the Axis Mutual Fund page says a 3-year lock-in ensures the money stays invested in equities and does not get perturbed by market ups and downs. Add to it, the fund manager can take much informed decision and look through the interim volatility. This is complete nonsense. This is sales talk. There is, in an open-ended fund, it doesn't matter whether the individual units have a lock-in of 3 years or not, because investors are going to come in and go out, and therefore this fund manager having long-term view, all that is nonsense. Beyond the first 3 years, for the first 3 years since inception, the ELSS funds acts like pretty much like a closed-ended fund. Nobody can come out, but people can come in. But after that, people can go out, come in. It's pretty much an open-ended fund. So it's just garbage. People use it to sell mutual funds. Distributors use it to ensure they get the commission. I don't think that's there anymore, I hope. So just don't worry about all this. This is just sales stuff. There's no evidence to back it up. So let's compare Axis long-term equity with its benchmark. And I have considered two mutual funds along with it. I will talk about that. So I hope this is reasonably clear. So what I have here, so let me, this is a very, too many colors in it. So first, look at the yellow line. The yellow line is BSE 200. The yellow line, BSE 200 is the benchmark of Axis long-term equity. The yellow line is the bottom. The green line is right just below the yellow line. That new yellow, the green line is Nifty 200 total returns index, and the red line is Nifty 100 TRI. So those are the three lines right at the bottom. BSE 200 is yellow, Nifty 200 is green, and the red is Nifty 100. So those are the three lines. You can see there's not much difference between the three. And now concentrate on the pink line. The pink line is Nifty large mid cap 250. This is 100% Nifty, 50% Nifty 100 and 50% of Nifty mid cap 150. So it's a little more tougher to beat because you can see the pink line is consistently above those three, the yellow line, green line, and the red line. Now, have a look at the white line. The white line is the Axis long-term equity fund. What you're seeing here, return data points. Each colored line has got 1154 5-year return data points inside it. Notice the gap between the pink line and the white line here. That's huge, astounding outperformance, almost like 10% outperformance. But notice that the gap drops down at August 2006. Just at this point, you can see that the gap is huge and then it drops down and it quickly narrows down. Just around this region, the fund became a 10,000 crore fund. That's when the AUM is rapidly swelling up. You can see how a sudden spike in AUM, like it happened for this fund, can decrease the quantum of outperformance. That's exactly what's happened, and that's a big problem. That is the reason why many people are disappointed with this fund, because they looked at this kind of stellar performance, outperformance, and after they jumped in, the performance became the outperformance became much lower, and therefore they were disappointed. So, and you can see that the white line is, the gap between the white line and the pink line has consistently become smaller and smaller and smaller and smaller, and it has become it's very small in the recent years. This is a big problem, and the investor should avoid funds like this which become suddenly popular. On the other hand, now have a look at the blue line, which is GSP tax saver fund, and also have a look at the the brown line. The brown line is ABSL Tax Relief 96 fund. That's the name, right? ABSL Tax Relief 96. Yeah. The brown line is the blue line is GSP Tax Saver. The brown line is ABSL Tax Relief 96. Notice that the gap between the pink line and these two funds, the brown line and the blue line, they're more or less similar, consistent. Their AUM never grew suddenly, and therefore the quantum of outperformance was more or less similar. And that is the kind of fund I generally prefer. These two funds, DSP Tax Saver and ABSL Tax Relief 96, are part of my plumb line list of mutual funds. That is the reason why I did not choose Axis long-term equity, because I don't like that kind of herding, because it will affect performance. It's very difficult for the fund manager to continue. Of course, in the last couple of years, the AUM influx has, the rate at which the AUM has grown has considerably come down, and that's because that's his immaturity. When people see the markets are falling and the mutual funds are not giving returns, they will not invest in it. That's when they should invest, but that's when they will not invest. That's such a tragedy. So essentially, I mean, still, all that said, still the white line, which is the Axis long-term equity, still the white line has always been above the pink line, but the gap has come down. That's why the investors are worried. But I think the fund manager has done a brilliant job, because the fund manager job is to manage. It is only the sales team which is pushing the AUM inside the fund. And in spite of the huge influx in AUM, the fund manager has done an excellent job in this case, I would say. They have managed to just keep their head above water, and the performance is very good. Existing investors can continue in this fund as long as they are happy. New investors, I would suggest avoid this fund. You might get disappointed because there's a bank associated with this AMC. Next time there is a spike in the market, then they will start pushing this fund again. There will be a sudden increase in AUM again. That's not desirable. It's better to stay away from AMCs that have banks because of this kind of pushing. They won't push all funds. Some funds they will push, and that's a problem. So that's what I have to say. I have the risk picture also somewhere. I forgot where I put it. I'll just add the risk. Axis long term equity has the lowest risk. I'll try to add it to the article. It does have reasonably low risk compared to the benchmark. So in terms of risk also, it has done well. But it's just this problem of AUM that I'm not personally comfortable with. But other than that, it's a very good fund. So again, one last point: please don't use an ELSS fund unless you absolutely need it. Better to use EPF, PPF, VPF, that kind of thing, because this lock-in of 3-year units can be very frustrating, especially if you do an SIP and so on. I would suggest avoid it unless you really need it. I have written a lot about that. Have a look at that, and if you have any comments about this, please below. So I'll catch you again in another video. Happy Ganesh Chaturthi to all freefincal viewers, readers. I'll catch you again later. Bye bye.